Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Izzati Atira binti Muhammad Azizun. My matric number is A248348. Today we will present the annual report of Nestle Malaysia Berhad and Fraser and Neff FNN. 1.0 Introduction. The food and beverage F&B industry plays a vital role in the global economy involving production, processing, packaging and sales. Financial operations in this sector include revenue from various channels, cost of goods sold, operating expenses and capital investment. Companies track profitability through metrics like gross and net profit margins. Nestle, a major global F&B player founded in 1866, operates in over 180 countries with brands like Nescafe, Milo, Maggi and KitKat. It emphasizes nutrition, innovation and sustainability. Fraser and Neff FNN, founded in 1883, is a key Southeast Asia F&B company known for 100 plus and FNN seasons with a focus on regional growth and consumer preference. This report analyzed the financial performance of Nestle Malaysia Berhad and FNN through profitability, liquidity, activity, and leverage ratios. It includes horizontal and vertical analysis to highlight strengths, weaknesses, and operational capabilities over time. 1.1 Business nature of Nestle. Nestle, a global Swiss company, has operated in Malaysia since 1912, contributing to the nation's nutrition, economy, and community development. With 12 manufacturing plants and over 6,000 local employees, Nestle Malaysia produces 100% halal certified products and is the largest halal manufacturer for Nestle worldwide. It is a Sharia-compliant company listed on Bursa Malaysia. Beyond food production, Nestle engaged in impactful CSR efforts such as Project Relief Reforestation, support for rural farmers, donation to the Malaysian Red Crescent, and brand-driven initiatives like Milo Sports Sponsorship, Maggie's Women Empowerment Programs, and Nescafe Student Entrepreneurship Support.
My name is Nur Faradia Nabita Razali. My matrix number is A2483330. Fraser and Neff Holding Berhad, founded in 1883 by John Fraser and David Chalmers Neff, is a leading and Sharia compliant food and beverage company in the Asia region. Known for its halal, high-quality products, FNN own popular beverage brands such as 100 Plus, FNN Season, Nutrisoy, Ice Mountain, and Oishi, as well as leading dairy brands like Teapot, Carnation, Cup, Junjong, and Ideal. It is the market leader in sweetener candies and everett milk in Malaysia and Thailand, and also offers juices and liquid milk under brands like Fruit Tea and Magnolia. The company expanded its food portfolio by acquiring Sri Nona in 2020, famous for Malaysia number 1 ketupat and top oyster sauce, and Coqueland in 2022. FNN is listed on Bursa Malaysia with RM5 billion in annual revenue. It operates in Malaysia, Brunei, Thailand, and China with business segment including F&B, Malaysia, F&B Malaysia, F&B Thailand, and property. The company aims to become a major F&B player in ASEAN.
2.0 Ratio Analysis, Liquidity Ratio of Nestle. The first one was current ratio. Over 3 years, Nestle's Malaysia's current ratio declined from 0.71 in 2022 to 0.55 in 2024, indicating reduced ability to meet short-term obligations. These trends suggest rising liabilities, decreasing assets, or both, which could impact cash flow, supplier relations, and credit standing. Nestle should strengthen liquidity by improving inventory turnover, receivable collection, and short-term financing strategies. Second one was quick ratio. Nestle Malaysia quick ratios remain low over 3 years at 0.21 in 2022, 0.22 in 2023, and 0.20 in 2024, showing minimal improvement in liquidity. Reliance of inventory for meeting short-term liabilities poses financial risk, especially during economic uncertainty. Sustaining liquid assets like cash flow and receivables is crucial for maintaining financial flexibility.
For 2.0 is about ratio analysis for Nestle Malaysia Berhad for average collection period This ratio shows that the ratio is trend decrease and increase. For in 2022, the ratio is 24.4 days. In 2023, the ratio decreased from 24.4 days to 24 days, and when 2024, the ratio increased from 24 days in 2023 to 25.4 days for 2024. For inventory turnover, in 2022, ratio is it shows that 44.95 times for the inventory turnover. In 2023 is also same is 4.95 times for the Nestle Malaysia Berhad doing the inventory turnover, and the ratio increased in 2024 from 4.95 times in 2023 to 5.222 times in 2024.
Nestle fixed asset turnover ratio show fluctuation over the years, reflecting change in how efficiently it used its fixed asset to generate revenue. In 2022, the ratio was strong at 3.99 times, rising slightly to 4.03 in 2023, indicating good asset utilization. However, by 2024, the ratio dropped significantly to 3.44, signaling a decline in efficiency. This sharp drop suggests Nestle may need to reason how efficiently it is using a fixed asset or consider the impact of market condition on the performance. Nestle total asset turnover (TAT) ratio reflects its efficiency in using assets to generate income. In 2022, the TAT of 1.88 indicated strong asset management, improving to 1.98 in 2023 due to likely operational improvement of favorable market conditions. However, in 2024, the ratio declined to 1.71, suggesting reduced efficiency, possibly from slower sales growth or increased asset investment without matching revenue. While Nestle performance well in early years, the 2024 decline signals a need to resist asset utilization to maintain its competitive edge.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Azim Muhammad Azri. My metric number is A24B3743. I will tell you about ratio analysis, debt ratio in Nestle company. Account receivable turnover. The account receivable turnover for Nestle Malaysia Berhad remains strong from 2022 to 2024, indicating effective credit management. It rose slightly from 14.77 times in 2022 to 15.23 in 2023, showing improved collection efficiency. However, a drop to 14.36 in 2024 suggests a slight decline in efficiency. Overall, the high turnover rates reflect good receivable control. Through the 2024 dip signals a need for closer monitoring. After that, debt ratio. Nestle debt ratio slightly improved from 82% in 2022 to 81% in 2023, reducing financial risk. However, it rose to 85% in 2024, showing increased reliance on debt. While manageable for a large firm, continued increase may rise financial risk. Number three, time interest and ratio. Nestle's tie Nestle's interest and ratio dropped from 2000 dropped from 20.07 to 9.49 in 2024, indicating reduced ability to cover interest for earnings. This suggests declining earnings for rising interest costs, which could limit financial flexibility and increase borrowing risk.
Good afternoon, everyone. Today we will be discussing Nestle and profitability ratio, focusing on two key indicators: return on asset and return on equity. Let's start with the return on asset. In 2022, Nestle Malaysia achieved an ROA of 25.41%. This indicates that for every ringgit of asset, the company generates approximately 25.41 cents of profit. In 2023, we see an improvement with a ROA of 36.32%, reflecting increased efficiency in utilizing assets to generate income. However, in 2024, there was a significant decline, with ROA dropping sharply to 60.96%. This decline suggests that the company's ability to generate profit from its assets has decreased, possibly due to operational challenges or market factors. This sharp reduction warrants further analysis to identify operational or market drive contributing to lower profitability from asset in recent time. Now, moving on, return on equity or ROE. In 2022, Nestle ROE was remarkable in 99.0%, showing that the company was extremely efficient in generating profit relative to shareholder equity. By 2023, this remained strong at 68.0%, indicating consistent performance. But in 2024, ROE declined to 75.9%, which still reflect healthy profitability but also reveal a downward trend. This reduction may indicate challenges in delivering shareholder return or change in net income relative to equity. Overall, this ratio suggests that while Nestle Malaysia has historically delivered strong profit relative to its asset and shareholders' equity, recent decline implies the need of continued attention to operational efficiency and strategic growth initiatives. In summary, the profitability ratio show positive trend in the early year, but likely areas are improved in recent performance. Further analysis focusing on operational and market factor is critical to understanding and addressing the changes.
Next slide, profitability ratio. The gross profit margin was 30% in 2022, increased slightly to 31% in 2023 due to better cost control, but dropped back to 30% in 2024 because higher raw material costs. Next, the net profit margin remained stable at 9% from 2022-2024, show that Nestle maintained a consistent and controlled pricing strategy. Finally, the operating profit margin was 30% in 2022 and 2023 as the company managed to raise product prices without losing customers. However, it fell to 9% in 2024 due to rising raw material costs.
Ratio analysis, liquidity ratio of FNN. The first one was current ratio. Over 3 years, FNN current ratio rose from 2.68 in 2022 to 2.95 in 2023, showing improved liquidity and strong working capital management. However, it declined to 2.46 in 2024, suggesting reduced liquidity. Although still in a safe range, FNN must monitor its capital allocation and liabilities to maintain financial stability and investor confidence. Second one was quick ratio. FNN quick ratio rose from 1.59 in 2022 to to 2.05 in 2023, showing improved liquidity and strong liquid asset management. However, it's slightly declined to 1.79 in 2024, indicating reduced financial flexibility. Despite remaining above 1.0, FNN should monitor this trend to maintain stability and investor confidence.
Ratio analysis for FNN Berhad. For average collection period FNN in 2022, ratio is showed that 70.7 days for FNN collect the average average period. In 2023, it showed that FNN has decreased very sharply from 70.7 days to 52.1 days, and the average collection period increased from 52.1 days to 59.3 days in 2024. For inventory turnover, FNN Berhad has showed the inventory turnover increase in from 3 years. For 2022, the ratio is 4 to 4.22 times, increased to 4.28 times in 2023, and increased again from 4.28 times to 4.76 times. It shows that the FNN for the inventory turnover is very good to they make cover the inventory.
Finance fixed asset turnover ratio show a gradual decline from 3.39 times in 2022 to 3.26 in 2023 and slightly further to 3.10 in 2024. While lower than Nestle, this figure reflects stable and reasonably efficient use of fixed assets. The slight drop in 2024 suggests room for improvement in efficiency or revenue generation, but overall FNN demonstrates consistent and effective management of its fixed asset. FNN total asset turnover (TAT) indicates moderately efficient use of assets to generate income. In 2022, its TAT was 1.07, showing decent efficiency but below Nestle performance. The ratio slightly decreased to 0.98 in 2023 and 0.96 in 2024, suggesting stable operational efficiency despite the drop. This change may reflect better inventory control, cost management, or favorable market conditions. Overall, FNN consistent performance point to all well-aligned operational strategy and a promising trend in asset utilization.
Hello, right now I will talk about ratio analysis debt ratio in Fraser and News per head. Number one, account receivable turnover. Fraser and News receivable turnover rose from 5.16 in 2022 to 7.01 in 2023, showing improved collection but dipped to 6.15 in 2024, indicating a slight decline in efficiency and a need for a continued improvement. Debt ratio. Fraser and Neve's debt ratio rose from 29% in 2022, increased to 34% in 2023, and increased to 35% in 2024, showing growing reliance on debt. Though still moderate, the upward trend may increase financial risk and should be monitored closely. Times interest and ratio. Fraser and Neve's interest and ratio fell sharply from 77.19 in 2022 to 80.02 in 2023, then slightly rose to 19.53 in 2024. Despite sufficient interest coverage, The steep drop signals the need for careful monitoring to maintain long-term financial stability.
Starting with return on asset or ROA in 2022, FNHB reported an ROA of 10.69%. This improved significantly in 2023, reaching 12.58%. The increase was driven by a higher growth rate in operating earnings compared to total assets, which suggests that FNHB effectively enhanced its asset utilization and operational efficiency during this period. In 2024, the trend continued with ROA reaching 12.69%. This consistent increase indicates that the company has maintained its improved ability to generate profit from its assets, reflecting a positive operational outlook. Moving on, return on equity or ROE in 2022, FNHB posted an ROE of 12.81%, which improved substantially to 60.17% in 2023. This growth was driven by faster net income growth relative to common equity, indicating enhanced profitability and efficient use of shareholder equity. Although ROE declined slightly to 50.81% in 2024. This is demonstrate a strong performance. The slight decrease suggests some challenges, but overall, the company has continued to generate substantial return on shareholder, maintaining a positive trend from 2022 to 2024. This update session paint a very encouraging picture. FNHB has shown consistent improvement in both asset utilization and shareholder return over the past 3 years, with some minor fluctuation in 2024. This indicates resilience and effective management effort to enhance profitability.
Next slide, profitability ratio. The gross profit margin increased consistent from 26% in 2022 to 28% and further to 31% in 2023. This shows the company successful adjust its selling prices while maintaining customer demand. Next, the net profit margin was 8% in 2022, increased to 10% in 2023 and remained at 10% in 2024. This improvement comes from higher product sales. Finally, the operating profit margin was steady from 10% in 2022 to 12% in 2023 and reached 30% in 2024. This reflects FNN, effective cost management and strong pricing strategy.
3.0 Comparative Analysis of Liquidity Ratio. The first one was current ratio of Nestle and FNN. The current ratio is a key indicator of a company's ability to meet short-term obligations. From 2022 to 2024, Nestle showed a declining trend in its current ratio from 0.71 times to 0.55 times, staying below the ideal benchmark of 1.0 times, which may indicate liquidity risk despite efficient operations. In contrast, FNN maintains strong current ratios ranging from 2.46 times to 2.95 times, reflecting solid liquidity and prudent financial management. Overall, FNN demonstrates stronger short-term financial stability, while Nestle lower ratios suggest higher cash flow and higher risk. The second one was quick ratio of Nestle and FNN. The quick ratio measures a company's ability to meet short-term liabilities without relying on inventory. From 2022 to 2024, Nestle maintained a low quick ratio ranging from 0.20 times to 0.22 times, indicating potential liquidity concern and reliance on inventory to cover obligations. In contrast, FNN show consistently strong quick ratios 1.59 times to 2.05 times, reflecting solid management of liquid assets and strong short-term solvency. Overall, FNM demonstrate better financial flexibility and immediate liquidity, while Nestle's approach suggests higher risk in covering urgent financial needs without inventory supports. The third one was net working capital. Nestle declining current ratio and quick ratio suggest tight working capital, possibly due to rising short-term liabilities or insufficient current asset growth. FNN higher ratio indicate a healthier working capital position with a strong ability to manage liability and sustain operational stability.
3.0 Comparative Analysis Activity ratio for average collection period and inventory turnover between Nestle Malaysia Berhad and FN. From from the first graph, I can show I can show that for the average collection period, the Nestle Malaysia Berhad have domination this average collection period because they have short days. What I mean the what I mean that the short days because the ratio for the Nestle Malaysia Berhad is between 24 days to 25 days, which is this is a very good Nestle to make the average collection period compared to the Nestle compared to the FAN. For the second graph column, which is for inventory turnover, for this event from this graph, uh, FAN have domination for the inventory turnover because they have a very short times to make cover their inventory to make sure they have a good efficiency to make the FN make out the inventory.
Nestle demonstrate high efficiency in using its fixed assets to generate sales, with a peak FAT of 4.03 times, indicating lean operations and reliance on non-fixed assets. However, a decline to 3.44 times in 2024 suggests possible overinvestment or slower revenue growth. FNN consistently had a lower FAT compared to Nestle, reflecting a more asset-intensive business model like grid to physical showroom or production facilities, despite a small drop from 3.39 to 3.10 over the years. FNM maintained relatively steady efficiency, possibly preparing for future growth. Overall, Nestle FAT trend shows strong but fluctuating efficiency, while FNN adds hybrid stable but lower asset utilization, aligned with its operational structure. Nestle had a higher TAT 1.88 times, indicating strong asset utilization and operational efficiency. However, a decline to 1.71 times in 2024 suggests reduced efficiency possible due to slower sales growth or overinvestment in underutilized assets. FNN, despite having a consistent lower TAT dropping from 1.07 to 0.96 times, shows steady performance and may have benefit from improved asset management operational strategies or adaptation to market change. Overall, Nestle remained efficient but experienced decline in asset productivity, signaling a need to resist its strategy. In contrast, FNN stable TAT performance reflect effective asset utilization even with a lower turnover ratio.
Next, we move to the comparative analysis debt ratio. Account receivable turnover. Nestle Malaysia showed strong and consistent receivables management with turnover rates of 40.197 in 2022, 15.220 15.23 2023, and 40.36 2024. reflecting efficient credit control. In contrast, FNHB turnover was lower and more volatile at 5.16 in 2022, rising to 7.01 in 2023, then falling to 6.15 in 2024, indicating inconsistent credit management and room for improvement. Nestle outperformed FNN in converting receivable into cash, supporting better cash flow and working capital. Next, debt ratio. Nestle maintains a high debt ratio, rising from 82% in 2022 to 85% in 2024, indicating reliance on debt to fund operations. While manageable for a large firm, rising leverage may increase financial risk if not matched by revenue growth. In contrast, FNN's debt ratio remains low, increasing slightly from 29% to 35%, reflecting a more conservative and financially flexible structure. However, this cautious approach may limit growth opportunities compared to Nestle's more aggressive strategy. Next, to, Next is time interest and ratio. Nestle Malaysia's time interest and ratio fell from 20.07 in 2022 to 15.48 in 2023 and 9.9 and 9.49 in 2024, indicating decreasing ability to cover interest, possibly due to rising debt or lower earnings. FNNHB's time interest and ratio was stronger overall, starting at 77.19 in 2022, dropping to 80.02 in 2023, then improving to 19.53 in 2024. This shows FNNHB had better interest coverage across all years.
In 2022, Nestle Malaysia recorded an impressive ROA of 24.41%, and this increased further to 26.32% in 2023. However, in 2024, we see a considerable decline to 60.96%. This sharp decrease suggests that Nestle faced some operational challenges or market pressure that impact its ability to generate profit, eventually profits asset. In contrast, FNHB ROA was 10.69% in 2022, which is increased to 12.58% in 2023 and further to 12.96% in 2024. This steady upward trend indicates that FNHB has been consistently improving its asset efficiency and operational effectiveness over the years. Moving to return on equity or ROE. Nestle ROE was extremely high, 99.0% in 2022, which generally reflects its ability to generate substantial profit relative to shareholder equity. Its remained close in 2023 at 68.0%, but declined to 75.9% in 2024. Still strong but showing some reduction in profit margin from shareholder investment. FNHB, on the other hand, started with 12.81% in 2022, then experienced a significant jump to 60.17% in 2023. In 2024, it slightly declined to 50.18%, but still maintained a healthy and consistent return. Overall comparison, Nestle Malaysia demonstrate very high profitability ratio, characteristic of a consumer staple company with stable margin, but the recent drop in 2024 indicates potential challenges that warrant further analysis. NHB shows steady growth in the both ROA and ROE, reflecting effective management and operational improvement, especially notable given its sector tends to have more moderate profitability ratio.
Gross profit margin shows how well a company can make profit after deducting the cost of goods sold. FNN was more consistent and efficient in managing its gross profit margin over the 3 years. Net profit margin measures how much profit a company makes after all costs, include tax and interest. A higher margin means better cost control and profitability. FNN maintained stronger net profit growth while Nestle faced short-term cost pressure for long-term gains. Operating profit margin shows how well a company earns profit from its main business activities before interest and taxes. FNN demonstrated stronger and more consistent growth in operating efficiency compared to Nestle.
First, it's important to enhance liquidity management. Improving liquidity will provide the company with better financial flexibility to respond to market fluctuation and fund new investment. Second, the company should reassess its asset investment. This involves evaluating existing assets and identifying opportunity to optimize and divest underperforming or non-core assets, ensuring resources are allocated efficiently. Third, strengthening cost management is crucial. By controlling costs better, Nestle can improve profit margin and overall financial health, especially in challenging market conditions. Fourth, maintaining a conservative leverage approach is advisable. Keeping debt at management level reduce financial risk and ensure stability during economic downturns. Fifth, the company should invest in product innovation and premium branding. Developing new innovative products and enhanced brand value will help attract and retain consumers, giving Nestle a competitive edge in the market. Finally, it's essential to monitor financial ratios closely. Regularly tracking these indicators allow for timely responses to financial performance issues, enabling strategic adjustment before problem magnitude. That's all from me. Thank you.
4.0 Recommendation for FN Holdings Berhad. For the first point is strengthen liquidity management. For first point, FN can improvise their current ratio, which is I can give example for their average collection period because for FN Holdings Berhad, average collection period is very a long day to make them cover their average collection period. For the second point is about the enhanced operational efficiency and asset utilization. FN Holdings Berhad can improve their two assets, which is fixed asset turnover and total asset turnover. These two assets can be FN's workers can be identified, which is these two assets is underutilized or obsolete. For the third point is about improve cost efficiency to sustain profit margin, which is FNN can optimize their raw material sourcing by locking in a lower contrast for their suppliers to sustain their profitability growth. For the fourth, optimize capital structure and debt management. FIN Holdings Berhad can optimize their capital structure and debt management by refinance their money or lower their interest to make sure their FIN's TIE interest can be strong for another year. And the last point is about the drive revenue growth through innovation and market expansion. This this point is FN can improve their ROA and also their ROE by develop a new product and and based on their evolving product. So that for the recommendation for FNN Holding Berhad. Thank you.
Conclusion: Nestle Malaysia Berhad shows a stable capital structure and good interest coverage. Weaknesses in liquidity ratios and declining profit margins indicate that Nestle Malaysia needs to improve how it manages its cash and day-to-day operations. Fraser and Neff Holdings Berhad displays a strong liquidity position and efficient receivables management, making